Hey, what's going on, guys? Welcome back to the channel. In today's video, we got a great one for you. What we're going to be talking about is IPOs, all about IPOs, whether or not I see myself investing in IPOs. And kind of the main reason that sparked this was a lot of people had questions around my valuations for Coinbase, whether or not I was going to be investing in Coinbase. So we're going to talk about that as well in this video. So without further ado, let's just jump right in. All right, listen, if you guys are brand new to this channel, you're just coming here for the first time, well, I want to say welcome. My name is Dalton. This is dlitztv, and on this channel, we talk about all things investing. And like I said at the beginning, this video is all about IPOs. And I typically, personally, I sit out IPOs and I wait for them to have a more established background on Wall Street before I end up picking shares of companies. So I did sit out Coinbase. We'll go further into detail about that here in the near future. But I want to talk about reasons why I typically stray away from IPOs. And before I jump in, I just want to say, guys, I'm not a financial advisor. You don't need to copy exactly what I'm doing. This is just kind of my methodology behind investing and IPOs specifically. And even though sometimes, it might be a good idea to invest in some IPOs, depending on the due diligence that you do. If you see a lot of value with these companies, IPOs aren't always a negative. But for the most part, every time I've invested with an IPO before, haven't had great results. So I want to talk about that a little bit. And I guess let's just jump right in. So when you're looking at IPOs and maybe you have no idea what an IPO is, well, I think it's a good idea to get a general understanding off the bat. So if you don't know what an IPO is, an IPO refers to the process of offering shares of a private corporation to the public now. So basically, before you get private investors, it's everyday people can't be investing into these companies. And basically now you are offering it to investors such as you and me. Now, companies must meet certain requirements by the exchanges as well as the SEC, or the Securities and Exchange Commission, in order to hold an IPO. So what this means is basically some random schmuck company, like I guess, dlitztv, for example. I couldn't just randomly go on and list my my own stock on the stock market. You actually have to go through some hoops and requirements in order to be able to offer IPO shares. So once you are an IPO, you may be wondering, what is this doing for these companies? Well, it actually provides them with an opportunity to obtain more capital by offering shares through the primary market. So they can generate more money. They can use that money to further grow the business and kind of choose however they want to use it. So now when you're looking at what companies do in the background before these IPO dates, well, they actually hire investment banks. And what the investment banks do is they market, they gauge demand, they set the IPO date, the price, and they do a lot of background stuff in order to prep the company to go public. And you might be wondering, what does it offer to those private shareholders that were investing in the company before it was public? And an IPO can actually be seen as an exit strategy for some of the company's, original founders, the early investors, where they are actually able to realize the full profit from their private investment. So they're finally able to, sell shares on the market and capitalize on their initial investment in that manner. So there's a number of different reasons, really four main reasons why I kind of stray away from IPO investing. Let's just jump right into reason number one. Now, IPOs rarely allow investors to invest at the initial price. So you look at IPO, initial public offering. That I in IPO stands for initial, but unfortunately, it's very hard to actually get access to the shares at the initial price that they're now being listed for. And so the reason why is because large clients at brokerage firms seemingly have first dibs when it comes to buying a stock at the IPO price. And even if you are able to purchase the IPO at the IPO price, it's likely that you're not going to receive enough shares to really make a financial difference or a financial impact in the future on yourself should the company do extremely well and absolutely crush the IPO. Now, also, if you are buying an IPO at that IPO price, a lot of times this means that these big institutional investors and these big brokerages are actually, passing on the investment, meaning that maybe it's not the best investment. And so at that point, maybe you buy a bunch of shares, the stock tanks, buying it at that initial price may not be the best thing. Now, that's not always the case again, and it is important to do your own due diligence, but that's just one red flag that can be raised if you're actually able to purchase them at the IPO price. Now, reason number two why I tend to stray away from IPOs is because buyers, including myself, can easily get clouded by consumer trends. So let's take a look at the pandemic and what went on. People were inside. They weren't really allowed to go out. They were nervous to go, pick up food, stuff like that. So that's where a company like DoorDash did extremely well, and their stock reflected during the pandemic, basically because people were staying at home, ordering food more, getting it delivered more. Again, they were a company that did well during that time. So when you look at that, you have to wonder to yourself, okay, is that already being factored in? Will the demand go down for this service as soon as things are lifted, people are able to go out more and more often, and maybe they're inclined to go to different restaurants themselves? That's something that you have to look at. And so for something like Coinbase, we've seen a ton of hype in the past with Bitcoin. In 2017, Bitcoin hit 20K. That was a huge milestone, and it quickly crashed all the way down to $4,000. Now, where does that impact Coinbase? Well, buying and selling cryptocurrency is such a large part of their revenue that, crypto right now is huge. Is it a trend? I believe in some of the technologies behind cryptocurrencies, and I think it does have the power to change the future. So it still could be a solid company, I guess, to invest in. But really, 60K Bitcoin has the potential to crash again. Is that going to deter some investors from investing in the coin? Is it going to get more as it drops? It's just hard to tell. So that's just another way that, consumer trend is just affecting that IPO. Now, it's just absolutely crazy to think that right now we're at all-time highs for Bitcoin, and other Dogecoin today was having a ridiculous day. So it's hard to think that that revenue stream is going to go away in the near future. But is this something that is actually going to come to fruition? Okay, now the third reason, which kind of ties in with reason number two, and it has to play off of that consumer trend, is that the valuations of these oftentimes become so inflated when they're on the stock market in the first few days, the first few weeks. There's so much anticipation building up to the listing that a lot of people are seemingly to just entering the stock market to buy these, and they don't really put in enough due diligence behind it. So you look at a lot of these IPOs and you realize, wow, the price to earnings ratios, they've increased so significantly to levels that really don't make sense and reflect at where the company is at today. And so I invest in some companies that don't reflect their current financial status where they are. One of the big ones in my portfolio, for example, is Tesla. And it's something that you want to keep in mind. And when you haven't seen how Wall Street has reacted to these stocks on the stock market, or how consumers are actually feeling about them, and what the company's current valuation is, it's tough to make that call at the IPO price. I'd rather sit back, with the potential of, losing out on some money in order to make a wiser investment in the future. And so, with that, it all depends on your risk tolerance when you're investing in these IPOs. Are you a riskier investor? Have you done enough research? Do you really feel comfortable with the investment prices? So, for example, I watch a bunch of different finance YouTubers. One of them is Meet Kevin. Put out his kind of prediction around where he saw something like Coinbase actually entering the market. He said it would be not unlikely to see it all the way up to $500. He kind of gave a range from $250, $350, all the way up to $500. And people just, it's tough to know where these are going to open at. So it's really hard to make that call when it comes to investing. Now, reason number four why I tend to stick away from IPOs is because of an analogy that I like to think of. Now, when you look at when you list a house on the market, let's compare this to real estate. So you were to want to sell your house. What do you do in order to get your house ready? Well, a lot of times you're going to put a little bit of capital into to make your house look as presentable as possible. So what do I mean by this? Maybe you're going to repaint the walls. Maybe you are going to finish some flooring that had been messed up, repair some of those damages from the past. And there's a lot that goes into actually listing your house on the market. But when you look at it, and you start wondering, you walk into a house, it's fair to assume when you're trying to buy a new house that the house isn't always in the exact shape it was in when you're now seeing it. And what I mean by that is rooms are going to be extremely clean. Everything is going to be wiped down. Things are going to be dusted. It's going to be taken well care of. A lot of the issues are going to be fixed. And, it's all sort of getting the appearance to look and appeal to buyers as much as possible. Well, that doesn't differentiate all that much from how IPOs are handled by different companies. So like I said at the beginning, some of these IPOs are actually, you hire investment bankers to make these companies look as best as possible, as pristine as they can. You want to make sure that you have everything in order. You want your finances to look great. You're paying attention in areas that normally would probably fall off the radar a little bit for some of these companies. And they're trying to make their best foot forward, try to get the best impression to generate the most awareness. That's the other thing. The marketing leading up to this. I'm a marketer myself. The marketing leading up to IPOs is so nuts. Like when I was looking at Coinbase, trying to see what was leading up to Coinbase, everyone was talking about Coinbase. Every single person, all these finance YouTubers, all of the articles coming out around the IPO space, Coinbase, everything was pushing it so hard. And it often can help attribute to clouding the decisions for some of these investors. So everything possible is being done to make your house look as great as possible, to make these companies look as great as possible. So it becomes infinitely harder to make a wise and sound investment decision. Now, companies aren't going to necessarily lie on their balance sheet, but they may move things around. They may move expenses to the following year. They may move expenses up a year. So it doesn't reflect on the current year that is going to be displayed when they're entering the market. So there's just a lot that goes into it. And at the end of the day, I try my best not to get clouded in judgment. And I feel like I'm a rather, commonsensical, if that's a word, a common sense investor who doesn't try to push anything, who doesn't try to push these profits, make these day trade penny plays. Like when an IPO hits, if it's something that I've done my due diligence in and I'm really comfortable with investing, I'm going to hold that company. I do it for buy and hold. I don't do it for quick returns on any of these stocks. And that's just kind of my methodology behind IPO investing, why I stick away from it, and why it may not always be a good idea to invest in IPOs. So if you agree with any of the points that I kind of brought up in this video, let me know in the comment section. I'd be interested in hearing. Did you guys pick up some Coinbase? Are you looking at any IPOs in the future for ones you may potentially invest in? I'd be interested to hear. So thank you so much for checking out this video here today, guys. I appreciate it, and have a great day. That's a good video.